Look, there's so much to unpack in our economy right now. Interest rates, the role of the Reserve Bank and even the position of its governor, Philip Lowe. Then there's today's information. Business conditions, they remain strong. That's according to the key National Australia Bank Business Survey. But Westpac says consumer confidence has collapsed to historic lows under the weight of ongoing interest rate rises. And today, the NAB Chief Economist, Alan Oster, said there will be 3 more rate rises in the next 3 months, and that the Reserve Bank's cash rate will now peak at 4.1%. Alan Oster joins me now. Alan, always good to chat to you. What made you come to that conclusion there will be 3 more rate rises?
Basically, what we saw in the Reserve Bank last week was essentially that they're saying, look, I'm more worried about inflation. I think wages are going to go up, and I'm also going to be not so concerned about keeping the economy on an even keel, and I'm not necessarily looking purely for data. So it's a more aggressive central bank, I suppose, is the bottom line. And then we look at what we're seeing in the actual data in January. Our business survey, as you said, conditions were strong. It was good enough for business confidence to go up. We're seeing wages and prices increasing a little bit, not as bad as they were, but still increasing. And so we've sort of sit back and think, well, why would the Reserve Bank not pause anytime soon? So they're going to, I think, just keep going until such time as they get a clearer sign that the economy is going to weaken.
All right, so then it comes to the governor himself. I find this rather curious. The calls for the governor not to be replaced in September this year as a result of rising interest rates. If it were me, it was actually not raising interest rates faster and sooner, and for not having believed that there was this inflation coming into our economy. I think that was yet another key mistake from the governor, but that also goes to the Reserve Bank board itself.
Well, we have an inquiry into the Reserve Bank, and I think they're supposed to give the government their suggestions at the end of March. And I think then the government, Jim Chambers, is going to basically decide what to do. So that's a decision for the government. I think there are lots of issues about, the Reserve Bank, and I think you're right with hindsight, but let's face it, no one had the hindsight. The mistake was they should have got going a bit earlier, and then they wouldn't have to go quite so aggressively. But still, compared to some of the other central banks, they're more inclined to try and not kill the economy, whereas some other central banks, particularly the Fed and also New Zealand, don't care about the economy. I think our central bank still does.
All right, take me to the consumer confidence numbers that came out of Westpac today. They show the consumer confidence really falling off a cliff. Now, that is, almost, if you like, the opposite to where the business conditions, even business confidence is right now. Explain why there's this disconnect by what business is seeing and feeling and what the consumer is feeling right now.
Well, the consumer's looking at interest rates and saying this is going to be awful. Whereas what we're trying to look at is not so much how the consumer feels, but how is the consumer spending. I think an interesting way to think about this is we look at retail, wholesale in the business survey, very strong. We look at business confidence in retail and wholesale, very weak. So this is sort of a disconnect between what are consumers worried about, and they're worried about interest rates, etc., and what are they actually doing? Well, they're still spending. And part of that is associated with you've got more immigration, you've got some wage increases, and so temporarily they're still spending. And so RBA, I think, will look more, not so much about what the consumer's worried about, but they'll look more at what the consumer's actually doing.
And we even saw that, if I jump in there, we even saw that today, the ABS stats coming out on that household spending and what was coming through there. That gives you that. So what you're saying is they might not be confident, but the reality is while they've got work and while they've got savings, they're continuing to spend. And that's why the business, confidence is not diminishing at this stage.
Yeah, that's exactly right. In fact, the business trading, how much sales they're making is going up. That's what's making them feel happy. The only people that aren't feeling necessarily happy in terms of confidence, as I said, is retail and wholesale.
Yes.
That's not to say that we're not going to have a big slowdown in retail. We will. It's just that it's not happening yet. And until the RBA gets signs that it might be starting, they're going to probably keep going. And so that's the sort of conflict that we've got. Now, let's face it, our forecast, which we sort of semi-released today, say that at the back end of this year, essentially growth stops. So we still have growth during the course of the year of about 0.7, but that's about half what the Reserve Bank's already expecting. So we're more worried about the consumer in the back end of this year. But what we're saying is just at present, they're still spending.
It's going to be interesting to watch it. Alan Oster, always good to have you on the program. Many thanks for your time today.
Thanks, Ross.